podcast from mpiinvest.com. Yesterday we could not post the pre-market report just because there was an emergency in family and I had to drive down in the morning. I did still try to post it, but then at that time we were in a place where the network was really bad, so I could not go live there. Okay, so coming back to the market, yesterday we could see a big bull run, isn't it? So basically, we could see, Reliance, Infosys, TCS. So naturally, day for yesterday, the US market had done really well. So that positivity was there, and that actually led to a gap up opening in the market. But what was something really surprising is that the SGX Nifty was not indicating that positivity, and it was expected to be a slightly flat to slightly very small gap up opening, but then there was a big gap up opening that happened, and after that we could see that gap up sustained as well. So that was something important. So the gap up sustained, and there was a rally in the Reliance, Infosys, TCS, majorly led by also by ITC. Yes. So, if you remember, in one of the podcasts, I had shared this that there were rumors that the government is planning to sell off its stake in ITC, and that led to the fall in ITC a few days back. So now the government has actually confirmed that they are not planning to sell any stake in ITC, and that's a great news. And that's exactly what probably fueled the rally in ITC yesterday. So it was of course good because most of us at MPA family are holding ITC in good numbers. So it was also a good rally that happened there. So apart from that, of course, today is the X date for ITC. So, for ITC dividend. So that could also be an additional benefit to all those people who bought yesterday because they would be eligible for the dividend today. So that's exactly why it was probably triggered yesterday. Now, apart from that, if you look at the European market, they also have closed in the green yesterday. And we did have a very important data coming in yesterday. That is the inflation data from the US. So meanwhile, day before yesterday, we had the Indian CPI data, that is inflation data that came in, and it was actually higher than expectation. So that was actually seen as a slight negative. But then it is, let's see, RBI policy means that they want the inflation to be within 6%. But now it has come to around 6.5%. That's kind of okay, not a big deviation. And probably it could kind of recover by next year, because after that the wholesale price index inflation did come, and that has actually come lower. So it's come around 4.5%. So that's again lower than expectation. So that's a good sign, I would say, because if wholesale price index also had come up higher, then there are high chances that the next month inflation data would go higher in India. So that can be seen as a positive, and market has reacted positively to that. So next major important focus was the shift on the looking at the US market. So in the US market, the inflation data was expected yesterday, and it has come lower than last month. That is, expectation was that it would touch to close to 7.2%, but then it's come last month it was around 7.5%. So it has now come to around 7.4%, but then it is of course still on the slightly higher side than expectation. So this actually has again triggered the fear in the market in the US that the Federal Reserve is definitely going to rise the interest rates in the upcoming monetary policy in March. So that actually kind of gave a very jittery day in the US market. So if you look at the US market, the graph shows, I mean, the way the candles have been moving was literally volatile. So that is something that, and there was huge volatility, and we could see the market going up, down, and then finally Dow closed in the red while Nasdaq closed in slight green. So the power to Nasdaq actually came in because Airbnb were announcing the results, and the results were good and better than expectation. So yesterday we could see Airbnb up by more than 4%. So that was a good sign there. Apart from that, Tesla also moved up yesterday. So both these stocks actually gave some positivity to Nasdaq yesterday. So that was overall what happened in the US market. So with the mixed closing in the US market and the rising inflation fears, what exactly happened is we could see the 10-year treasury bond yield going up, and that is not a great sign for the tech stocks. So naturally, that could probably wane on the IT sector in India. So that also is something that we focused on. So today we might see some pressure on the IT sector in spite of the rally that happened yesterday in the IT sector. So that is one thing. The second important thing to be looking at is US announced that they are planning to sell off their excess holding of crude oil. So this immediately brought down the prices of the crude oil in the world market, and naturally, we could see the market actually falling. I think the crude oil prices are down by almost 1.5% this morning when I looked at. So with all that, I would say India would also see a mixed opening. In fact, if you look at the Asian markets already are giving a mixed reaction. So with that, we could expect Indian market also to kind of go slightly mixed, because IT sector will see pressure from the US market, and that could kind of keep it low. And then we could see pressure kind of easing out on Reliance, because it's energy stock, and that with the crude oil prices coming down, pressure on Reliance will be slightly there, because they are a refining company. But apart from that, if you look at overall market, lower crude prices is actually good for the Indian market. So FMCG stocks might slightly perform better. So these are few things that could be looked at today. So slightly negative for Reliance, slightly negative for IT sector. So with all this, we will see the market continue to have seeing some pressure. So that is why I would say this would be important day to look at, because yesterday one important thing that we could watch was the 17900 level, which was a very important level, has kind of broken yesterday and closed higher. So that is something very important. So that actually has given some power to Nifty. And not only that, we could see some short covering happening. So now the most important level to watch is the 18,000 level. So at 18,000, what happens is, if at all 18,000 is broken strongly, there are high chances that we could expect Nifty to have another short covering rally, and that could probably take it higher to 18,100 levels. However, that may not happen in next 2 days is what I expect, because now as I look at the Asian markets, they are kind of slightly negative, and if you look at SGX Nifty, it's already indicating a gap down opening. So if we see a gap down opening close to 50 points from yesterday's close, that could recovery as well. So if that recovery happens, 18,000 is broken on the higher side, then we will also can come in, and that can actually kick in for a summer rally. So 18,000 is important to watch. That's exactly what I'll be looking at. And apart from that, on the lower side, 17,800 to 17,700. So 17,700 to 17,800 would be the important support levels. So let us see. I mean, there are chances that the fall or the gap down opening may not be sustained. There are chances it can go up. However, 18,000 feels tough to break. But if 18,000 is broken, then it's better to clear off 18,100 positions, and slightly maybe 18,200 could be a better position there. So these are things to be planned for the day. I'm announcing it here because I may not be tracking the market very actively today. So do watch out these levels, very important. So that's it for now. I think everything else looks fine. So yeah, if you look at the DIAs and FIA data, yesterday FIAs have bought for almost 1,300 crores, while the DIAs have bought for almost 200 crores. So total, it was buying of 1,500 crores. Now, if you see one important thing, last 3 days, the FIAs have been buying continuously. And if at all they continue buying, then there are chances again that 18,000 can be broken. So overall, I would say the most important level to watch right now would be 18,000. If 18,000 is broken strongly, it's better to square up the 18,100 positions and move it upwards. So that's something for now to be on the safer side. So that's it for now. I think tomorrow also I'll be traveling back to Bangalore. So I'm not sure how the network would be, because early morning, if I leave from here, the area in Coorg, or for I pass through that area, the network is really bad. So if I'm able to cross that area and get into some good network area, then I would definitely post the market report tomorrow as well. Tomorrow is of course important, being the expiry. So yes, I would look forward to plan such that I don't miss the expiry. Let's see how it goes. So have a great day. See you. Bye.